if you're talking about Bitcoin and you're talking about crypto, and now all of a sudden you say, well, I'm going to live an extra 10 years, I'm going to live an extra 20 years, I think that strips out the risk that people have been worried about with Bitcoin, which is the volatility. And so over the longer term, the digital economy is only going to grow. It has grown. Bitcoin has worked.
That changes the game entirely. Suddenly, duration assets with the ability to grow steadily over decades, become not just attractive, but essential. Bitcoin, with its long-term growth trajectory, finite supply, and increasing adoption, fits into this narrative in a way that short-duration assets or bonds simply cannot. The volatility argument that's often used against Bitcoin begins to weaken. If you have a 30 to 50-year horizon, short-term price fluctuations lose relevance. What matters is long-term structural upside.
The most important argument for Bitcoin, I think there's two things that hit me as from an investment standpoint. The first one is just how overweight everyone is in quote unquote technology and stocks in general, but also just in fiat assets. So we've all talked about the fact that there has to be this kind of diversification that's going to happen. Well, 401ks are a pool that it really should be happening in, especially because of the story that we've talked about, I've written about. You know, Rick Edelman has gone on a bunch of podcasts and talked about the need to have a significant amount of money into crypto. And he brings up two important reasons. One is just the fact that if you're going to live longer, which is what AI is going to bring, you need to have more duration assets in your portfolio, meaning you need to have more growth. And if you're talking about Bitcoin and you're talking about crypto, and now all of a sudden you say, well, I'm going to live an extra 10 years, I'm going to live an extra 20 years, I think that strips out the risk that people have been worried about with Bitcoin, which is the volatility. And so over the longer term, the digital economy is only going to grow. It has grown. Bitcoin has worked. So I think for people that maybe were, you know, in their 70s and not thinking about this, I think when you start living to 100 to 110, it really opens up more and more thought process. So I think the government is supporting this, not just from allowing it, but I think they're allowing now the banks to actually cover it, to actually have people talking about it, doing research on it. So I think there's a comfort level that's growing, and obviously the price performance that helps out as well. I think what has started to happen, and this really started in 2022, the worst year that you could possibly imagine for crypto would have been that 2022 year in terms of FTX and everything that happened, the regulations coming out of nowhere and just making sure everything stopped. And Bitcoin was down about the same amount as Amazon was that year. When you're talking about the Mag 7 having corrections that are equal to, when you're talking about NVIDIA having a higher implied volatility in the options market than Bitcoin, you're kind of already going through when the largest company in the world, which everyone owns because of their passive weighting, is already there. So I really don't care that much about the arguments on the risk side. I think people have missed the fact that as a retirement person, I think if you have a bond and it's unchanged over 5 years while inflation has been high, and at the same time, you're getting more volatility from the stocks in your portfolio that you own, there is absolutely a place for Bitcoin. And I think that's been one of the biggest changes is we've seen volatility come down sharply in Bitcoin this year.
So rather than try to time the next big token or innovation, Visser suggests focusing on core assets with strong network effects. Bitcoin and Ethereum represent foundational layers of the digital economy, analogous to Amazon and the internet backbone in the early 2000s. They aren't guaranteed winners, but they offer a combination of scarcity, utility, and adoption that make them serious contenders in a world where everything is moving faster than ever.
This is the fact, and I heard Jack Mallers talking about this recently. There's been a lot of corporate treasury activity. You've obviously had a lot of convert selling by Saylor. You've also had them doing these override strategies. You've had new people come into the market in Bitcoin and realize that they could get 10 to 20% returns by just selling, doing either the futures against the cash or selling upside options and just continuing to do it. So I think we've been in a world, there's been a lot of supply that's come to the marketplace in terms of volatility that's helped suppress the implied volatility. I've said with you, I'm going to keep saying it, I think the major issue is going to come that people are forgetting when you're selling upside volatility in an asset that actually has a finite amount. If you start to break higher and people need to go out and cover those shorts, we haven't had a short squeeze yet in this while the institutional buying has been happening. So every time that people ask, how can we still be sitting around 120,000 when Sailors bought X amounts and all these corporate treasuries have purchased, and you're seeing all around the globe now more and more companies are doing it. To me, that is a function of the volatility. I always reference the deribit market and just where the strike prices are, but it's more than just that. It is the vol compression coming from Sailor and all these people. The difference is this is not a fiat asset. As it goes higher, you can't go, okay, we're going to issue more Bitcoin. You start to run into a situation where there's a squeeze. And that's why I said, and I still believe it, when I look at the charts right now, they're great. They're going higher. But here's the thing. Ethereum, which is a critical component to the traditional fiat world's ability to put a narrative behind crypto, which has a fundamental tone to it because it's an innovation. They like to invest in innovations. Bitcoin is gold. They want an innovation. Ethereum is nearing a triple top, which is right around the 4,000 level. And then you have 5,000, the all-time highs. I believe once Ethereum gets through 4,000, Bitcoin will race with it and they will both start going. So I think we're getting closer and closer in that. And that's why this whole conversation about volatility compression, I think this is all setting up to bringing in the avalanche where people are going to be chasing and there's going to be FOMO. And I'll bring up one more thing. I've talked about it repeatedly. I believe that in the traditional asset world, the problem for people is going to be they are heavily overweight technology. You'd be coming from an audience that was crypto dominant. I'd be coming from an audience that was macro and traditional finance dominant. So I don't disagree with anything that you said. In fact, I say to everyone, I don't care what token it is, what innovation it is, in a world of ideas become reality in hours as opposed to months and years, there will be insane competition, and I don't want to invest in any innovation and try to pick the bottom and the top of these because it'll happen too fast, which is kind of what you're saying. There's better innovation. That's not I'm looking at it from the group that I know. Mm-hmm. So when they say I can't value Bitcoin, you know how they can value Ethereum right now? They can go, how many stablecoin volume is going to be, what are the transactions going to look like? Ethereum's the connection to that, and Circle is my connection to that. So I'm actually only arguing what people that I know what they need. They need to do the traditional network effects, just like they do for compute, just like they did for Facebook, just like they did for Amazon. They have to come up with a valuation, and the easiest thing for them to do is to look at the growth curves and go, hey.
So the question isn't whether Bitcoin will be volatile. The question is, can you afford not to have any exposure in a world that's changing this fast? If this gave you a new perspective, be sure to like, share, and subscribe for more deep dives into crypto, finance, and the future of investing. Drop your thoughts in the comments below. Do you agree with Visser's thesis? Or do you think Bitcoin still has more to prove?